Good morning, guys. Welcome to this Thursday, September 11th, and it is September 11th, 4-year anniversary of the 9/11 terror attack. That's going to be a somber day, as it always is. And also we had the this assassination of this Charlie Kirk character, which is pretty tragic, pretty tragic. So a lot of stuff going on. News is blanketed by that as a political assassination, but it's not going to be impacting the markets per se, so we'll just get to that. So far, the overnight has been holding on pretty good, and we are pretty much holding on to the gains from yesterday, just kind of holding in this range. So at this point, that's kind of where we start. Now we have news today. We have plenty of news. Starting off at 8:30. Well, not plenty of news, but we got news CPI and jobless claims. So the CPI number is going to be a big number to come out here at 8:30, and jobless claims at the same time as well. We have a nat gas report at 10:30, and then we have a treasury statement at 2 and a 30-year bond auction at 1. So yeah, so 30-year bond auction at 1 and a treasury statement at 2. But I think the news this morning, CPI, jobless claims, going to be the ones to watch for the market, especially that CPI read and see what happens with it. So starting off today, ES is still holding on to the gains. It's actually like when it grinds to the upside, and you know how it goes, grinding to the upside. And if a day where something happens, or you get a little bit bent out of shape, you get one of these elevator down kind of a day, and when it runs like 2 weeks of gains, but right back down again. So, but at this point, we're still up here trying to do a price discovery. Yesterday, we extended to the upside, so we're going to be starting off on the long side, assuming this is a move out of the middle, and trade it as such. So looking to buy weakness at 65.45, 65.35, 65.25, down to that 65.15s. I would say below the 65.25, I'll be taking off the long bias and going back more range bound. Last one below the obvious 65.15 would be the last one I would look to buy against. But as you can see, it's they had to go pretty far, not super far, but pretty far. They're at least 30 points before they're down here to these levels. So starting off with looking to buy weakness for rotations up and on the way up. Looking to sell against the 55s and the 60, 65s with a lot of caution. Not going to be super aggressive since we are in the move out of the middle to the upside. And one of our rules, don't fade and move out of the middle. So selling the 65.55 and the 65s with a bit of caution. Prefer to buy weakness, 45s, 35s, 25s down to the 15s. But as I said, below 25s, I'm taking off the long bias. Below 15s, I think we are heading back in this lower range, and this move out of the middle basically gets nullified. So this could still get nullified and reverse right back to value pretty quick, in which case this turns into more of as an extension, a probe to the upside, which failed. But right now, I'll treat it as a move out of the middle, and then let's see if they're going to try to take this higher. So that's how we get started on the ES. Pretty straightforward. We are up at the highest. The only caveat I had to point out is, as remember, sometimes out of nowhere, without even any piece of news, you get the day like when they actually take all these gains and just absolutely knock it down. So we had a pretty good knockdown here on the 5th, but it's right now we are just grinding right back up from there. So we'll see where they're going to go from there. That was the employment situation on Friday. So that report knocked it down hard. Monday, it retraced a little bit more. Tuesday, Wednesday, even more. And so we've been kind of slowly retracing to the upside here. So we'll see if they can extend. But that's how we get started on the ES. Looking at the bonds and the NASDAQ, so bond market pretty much holding where we left it. They're holding this 117 level. So they're technically in a spot where they can take it higher on the bond market. As I said, we are in a spot where bond market is in the move out of the middle to the upside. So they have taken a good step higher, blown through all these resistance areas. They're up here against this upper area. It's the 4-letter edge at 17. And so far they're holding above it. So as long as they hold there above it at this attractor area, either going to go sideways right at this attractor at the 117.16, or you may see further moves to the upside. And if they start trading higher on the bonds and yields keeps going down, that would be positive for the stock market, especially the mid and small cap stocks, which gets valued based on their net present value. So on the bond market, looking for a range bound market right now. We are at that attractor area. I would favor the long side as long as they stay above 117. So I would be looking to buy against the 1708s, 17.224, and 16.28 to 30s. Below that, I'm below 17. I'm taking off the long bias, and if this was down here at the 16.28s and the 16.22.23s, I would be looking for a potential move to the downside. Still looking to buy against these two support areas, but not as aggressively at that point. And on the way up, looking for shorts against the 17.16s and 17.24s. Could set up nice short trades for rotations back and down again. So that's the bond market to get started. NASDAQ also back up here, and then it's the same as the employment situation, knocked it down. They retraced hard since then, and we are almost up to yesterday. They were almost up here in the price discovery again, and that's a pretty good feat. NASDAQ was kind of behind on that, but now they're right back up again. They're trading it on this little attractor here at the 940s, and I would start off as same as the ES on the long side of the market, looking to buy against the 23,900s, the 860s. 830s down to that level, the 780s, and below 780s, that takes us down here to that low. I think we're taking out that long bias and going back and looking for a retracement trade, going back range bound at that point. So fairly not super aggressive on shifting the bias, giving a little bit of room today. So 900s, 870s, 830s down to that 780 to 90s for rotations back up, looking for buying opportunities. And on the way up, since we haven't really cleared this resistance area yet, I will be looking for shorts against the 950s and 24,000s for rotations down. This would be a pretty good short setup if it holds. So looking for shorts up against these two resistance areas. If they take out the 24,000, just stay on the long side. We are heading higher at that point. But it could be a nice reverse retest or retest failure setting up here at the 24,000. So it should not be ignored. And remember, that's what we trade, failure to take out the edges. And that's usually what happens. And that 24,000 is a pretty good edge at that. And then finally, oil and gold. And gold has been, let me find my gold chart on F1 here. It's been kind of holding around that 36.70 to 80s. A little bit of weakness here in the overnight. They're down here at that 36.50 now. As I said in the overnight, if they take out the 36.50s, say look for a retracement trade. If that holds, look for a move right back to value again. So we were trading in the range going into the overnight. We were looking to buy down to that 36.50s. We were looking to sell up to that 36.96. And that's pretty much what it still is the range. Now the overnight looks pretty weak. So if they take out that 36.50s, I would just stay on the short side and see how far they can run it on the downside. They have been extending with such a crazy pace that we're due for a pretty good retracement, but we will see when that comes. So from this attractor, the next attractor that would be down here at the 3600 if they start heading lower. So this would be, if they take out that 3650, I would expect it to run all the way down to that 3600, right? So it could be a lot of range to run on gold. So that it's volatile. It's pretty scary to trade if you don't have big stops and a lot of guts. So that's gold. So I would say looking to buy against this support area at 3650s, and if that holds, look for retracement back up again. I may look for shorts against that 3660s and 3670s, given that there have been this overnight weakness. So if they trade up above that 3670s, we're definitely heading back up again, So you can look at this like, okay, they take out the lows, but if they bounce off a little bit, you see that they've been this area, this 3660, definitely that 3670 has been holding for resistance for a while. So that could still be good for a short for rotations back down again. But if it takes out that, then we are heading right back here to that 3670 to 80s, back to that attractor. And then finally, oil. That's trading in a range around 30, 60, 63, 64. They were right up here to 64 right now in the yesterday's session and backed off a little bit. So I would just trade that as a range bound market. Looking to buy weakness all the way down here to that 61.50, selling strength all the way up here to the 65.20s, technically. Initially, I would start a bit tighter though. I would say looking to buy again 62.90s, 62.60s. Looking to sell against 63.70s and 64s. And if it trades outside of that range, we may have a directional move just in the short term. So fairly tight range on that one. And if they trade below that 62.50s, I would look for a potential short down here to that 61s. Still looking to buy against these support areas, so we have to be mindful, don't sell into a support area or buy into a resistance area. That's usually the mistake you make when you get caught in a shitty trade. So looking to sell strength against 63.70s, 64s. They're going to buy weakness against 62.90s and the 62.60s for rotations back up again. Right, outside of that, we may have a directional move, but we're still very much trading in a range. So it's still looking to buy support and resistance as if they extend outside of this range. All right, I haven't traded either of those two for a while. It's just, I took a one gold trade a while back, but not too long ago, but that was a special case. So you have to pick your opportunities on those two because they are volatile and full of cross currents right now. All right, back to the ES, and so far, pretty much leave it where it's at. And yeah, pretty much where we left it. So today, 9/11, full of going to be memorials, and we're going to be watching out for any mischief. And of course, there's going to be a lot of coverage about this political assassination, which is just a freaking shame. But that's what it is. That's where we come to. So it is pretty sad. But anyway, so we'll leave it there for now. So good trading, guys, and I will see you back at 11:30 for the next update. All right, guys, later.